Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 18th of June. Starting off with the FTSE 100, which is still remarkably clinging to the floor of that rising trend channel there from the beginning of the year. Floor of the channel there nominally around 81.30. Below that, we're looking for potentially a test of support, the initial April resistance and late April support around 80.40. But remarkably, as I said, we seem to be holding the floor of the channel. What we are missing, though, is an end-of-day close back above the 50-day moving average, which has been resistance for the last three sessions. That's currently around 81.80, and above that, then we're looking for 8300 for this market. But obviously, maybe it's a bit early to look for anything more. RSI at 44, which is on the wrong side of neutral 50, and maybe explains why we're still struggling here. Moving on to the DAX, which had a bad end to last week, trying to regroup now, finding support in the old April support area, so from basically 17,800 upwards, and still missing an end-of-day close here, 18,300 above the falling 50-day moving average. That's quite a serious development there. If we can get through that 50-day line, then it's back up to the highs, but otherwise we still have the risk of a test of April support, 17,600 at worst. RSI in the upper 30s, which is exactly where you don't want it to be if you've also got a falling 50-day line and you've broken down from recent highs. Moving along to the Dow, and here it's been, I suppose, dragged up by the S&P and the Nasdaq. Close for this market just above the 50-day line. Nice hammer candle to end last week rather, and looking for this market to break recent neckline resistance of 39,100. And break back above RSI 50, it's 48.5 at the moment, so not too far away. And just the first hint as well that the 50-day line is starting to rise again, which would be a good development. On to the difficult market of the moment, and that is Bitcoin here not looking good in the sense that we seem to be losing the floor of that rising trend channel from the end of last year. Still hanging around that 65,000 level, so can't say that it's all over yet, but below 65,000. On an end-of-day close basis, we run the risk of a move down to the March support line projection and the 200-day moving average, currently around 56,500. RSI at 42, and it's failed at neutral 50 twice, so you can see those little kinks in the RSI trace, and only basically above the recent resistance, 67,000, on an end-of-day close basis, getting the Bitcoin situation out of its current rather difficult-looking status. Next up is gold, and here we have this market with a problem near the 50-day line. That's currently around 2360. We've also got a line of resistance there, 2380. And if you're aggressive, I suppose you'd be looking for a break of the 50-day line to take us higher and retest 2450 for the third time. Otherwise, still the risk of 2280 in the floor of that channel from back in December, especially given the way that, as you can see, we've got two little failures there for the RSI at neutral 50 after failures in the low 50s, which is just about the worst thing you can get in terms of RSI leading indicators. So we'll see if gold can get out of its current malaise as in the way that Bitcoin also is looking like it is in trouble. On to the stocks, and starting on with BSF, where it was interesting that one of the recent share purchases was 30 quid, but at least the director share purchases rather, but at least we have already been calling this higher. We broke out of that falling wedge around 5 pence and the 50-day line. Above that, looking for not only the 50-day line there at 8.3 pence, but up to 10 pence. Obviously, placings, etc. permitting. Worst case here is probably that we would just go up to 7 pence and test old October support before falling away again. But it looks a bit more encouraging than it has done for quite a while. And we also had a gap close buy signal last week, the gap down there earlier this month, and then closing that at the end of the week. On to CapEx, where Dr. Graham Cooley has joined the board, which is quite legendary, I suppose, in terms of his history. Here we've got the potential at CPX of a rising trend channel base. We're above the 50-day moving average, the blue line there, for the first time since back, well, the first time this year, actually, which is quite remarkable. And the other thing to note here is the way that there's a gap to fill up there at 0.16, basically. That's the top of the March gap, and then the top of the rising trend channel here, 0.18, which we're looking for by the end of next month, especially if Dr. Cooley steps up to the plate in any meaningful way. Moving on to one of today's big rises, which basically it's come out of nowhere. Here you can see that we've got an unfilled gap to the upside off the lows, which tends to be a good signal, and broadening triangle there. So the best case is that we would head up to around 10.75 pence while we're above the 50-day line there at 6.4 pence. Moving on to Eurasia, which I just look at just to poke fun at the bears. Here we had the market finding support there around 2.4 pence, then the other level 3.1, and then hoping for 4.7, hopefully by the end of this month. Miracles could happen. And then if there is an end of day close above 3.1, then looking for a retest basically of the early spike of back a week or two ago. Moving on to first class metals, which is back, and here decent update to date. Today rather, we were suspended for a while, but the formation at the moment suggests that we could hit that January resistance line there at 3.75 pence while we're above the 50-day line, and the 50-day line currently at 2.7 pence. We haven't actually been above the 50-day moving average since back in May last year, so that is quite significant. Breaking the 50-day line after an extended bear run tends to be the first sign of a proper turnaround. So let's see if we can get 3.75 pence by the end of this month as a best case scenario for first class. And as you can see there, the gap to the upside, and we've got a rising 50-day line there as well. So it's everything to play for there on that stock. Longboat is next, and here you can see that we had that W-shaped reversal. We broke the bottom of the gap there at 9.3 pence roughly, and looking for the initial target there at 20 pence, which we're not too far off with the high today so far, 17. Above 20 pence, best case is up to 28 pence by the end of next month, although it's difficult to see how it could go that far in such a short space of time. But the best case here is that we stay above the 50-day line and old October support there, just under 15 pence on an end-of-day close basis. If we can do that, it would be quite remarkable. And the other point to note is that we've had a double bear trap island reversal, so gapping down back in April and May, and then gapping up this month. So that is one of the strongest setups you can have. Moving on to Mosman, and here, just because I'm so pleased with the name I coined yesterday, I'm showing the stock again. The levels here are 0.33 and 0.47, and Mosmania continues for the shares, but resistance there just at the moment around 0.04, so worth keeping an eye and seeing when that breaks, because if that does break, then we could actually get more than 0.047, but the key here holding 0.33. Next up is MetalNRG, which has transformed itself over the recent past, almost like a different company. Here we've already been following this stock from the 0.06, 0.07 area, unfilled gap to the upside back in May. Current situation is that we're looking for one of our final targets here, which is up to as high as 0.27, and looking for that by the end of this month at 0.28, probably closer to the mark there, while we're above the 0.2 area. Moving on to the last three. First one is quantum blockchain, where even though 6 million euros is supposed to be coming into the kitty, the shares have been relatively flat. We're still near the lows. We did gap up, but the resistance there at the 50-day line just around a penny, and it'll take a bit of work to break that combination of the 50-day line and the October 2023 resistance line over the near term. Really need to see an end-of-day close back above February support there, 0.91. Great news today from Synectics with a $10 million contract that ensures that the shares remain within their rising trend channel, which we've looked at before. That's been in place since November, looking for £2.40 as soon as the end of next month, which I think with a contract that size, the company fully deserves to be there. Finishing off with Superdry, where it is July the 11th, July the 12th rather, not July the 11th, when the Shares delist, I thought I'd mention that. The shares managing to hold above the 50-day line on an end-of-day close basis, that's at 6.4 pence. And the longer they do that, the greater the chance of a final flourish as a goodbye from the company to the stock market up to 14 pence. But as we said, after the latest rally, the share's looking a little bit tired. We just really do need to stay above that 50-day moving average. That's it for me today. More updates tomorrow.